Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. I was doing my other video and I was kind of thinking, hey, maybe I should talk about what I would have done differently in my 20s, and how I would have played stuff out, just kind of reflecting back. I am 40 years old. I have made a good amount of money. My net worth is pretty good, at least in my opinion. But I could have made far more money. I'm talking far more money. Far more money. And where I messed up when I was doing this in the beginning, in my early 20s, and I didn't know anything, guys. I'm just like everyone else. I didn't know anything in my 20s. I didn't study anything in finance, and I don't know if that would have helped me anyway. Because a lot of it deals with being mature and mentally, you kind of have to mature and grow out of phases. Um, Doing a lot of price chasing when you're young and stuff. What I would first do is subscribe to the channel, honestly. The channel here is providing so much value for people to make and build wealth that I think it's completely worthwhile to subscribe and listen to a lot of these videos. And I'm being honest here. What I messed up is I was not holding long enough. I didn't know the market conditions. I didn't know what interest rates, how they impacted investments. I didn't know money flows. And those are more important than looking at fundamentals of companies, because the fundamentals of companies are impacted quite dramatically by money flows and by the environment. A high inflationary environment might be okay for some companies for a little while, but it depends on how big the inflation is and what the interest rates do with that. So if I had known what I had known today, and I could go back and redo it, what would I do different? What companies would I own and why would I own them? If I could go back, I started working in 2004. Yeah, 2004. The one thing I did very well is I was living in Huntington Beach, California. I worked at an aerospace company. You could probably figure out which company that is just by me telling that. I was there and I noticed that it was far too expensive. It's just far too expensive. So I worked there for a year. I got a different job, hightailed out, and went back to Minnesota. I was making good money. I lived with my parents for a short while, and if I had known what I had known today, and I'm working, I saved a lot of money. I mean, a lot of money. I'm a saver. I did not spend a lot, and I put all my money to work. I just wish I knew what I was doing better than what I did at that time, because I was learning more about my job and focusing on my job and not focusing as much on investing, but the information wasn't there. I didn't have a mentor. I didn't have a YouTube channel with a guy named Andy running a Finding Value Finance channel telling me what I should be looking out for and what I should be, doing. I didn't have that. So if I could have my future self go back and tell my old self, then I would be set up pretty well. So what I do wrong is I was trading in out of stocks. Don't do that. It's not how you build wealth. You need to identify the market conditions. You need to identify the ratios and where all of your best asymmetric bets are, and then you invest in those. Follow the channel, do the technical analysis, look at some of these companies that are down, that are improving. I think we've got this nailed down pretty well. And I should have invested at that time. It was 2004. I should have went heavily into commodities at that time, because that was right when the commodity boom was coming. Of course, I had zero commodities at the time when I first graduated, because I didn't know what I was doing. Then I started kind of catching on. I got lucky. I bought some palladium, bought some physical metals. I was getting a little bit lucky, but I was chasing. I admit it, I was chasing. We had some booms in commodities. It got me all warmed up to commodities, but I didn't know what I was doing. I just didn't have that experience. And I mean, just looking back, I would have rode the commodities up to 2008. The ratios would have had a sell signal. If I knew how to read charts, and remember, it was really hard to get all these charts. It was really difficult in comparison to today, but there was some charting stuff back then. Had sold everything at 2008, and then I would have purchased stocks in 2009. Would have bought a lot of stocks. I would have bought, which I did buy. I would buy Chipotle. $54 is what I owned. I had 20 something $1,000 at 54 bucks. If I'd held on to that, if I just held on, I think it's at like $1,800 or something right now. And if it's 1,800 divided by 54, 33 times your money. But I was big into that. I was big into Baidu. I bought at $100, split adjusted would be $10 today. I had Google. I had all those companies. And they were in a 401k as well, because that was, I like put a whole bunch in a 401k and we got bought out, and my 401k, they moved it to a different thing and they had to sell all my stuff. I was like, no, I would have been better off quitting the company and leaving those in there. I would have made more money in those investments with how much I had in there than what I actually made from work. I'm not joking. That was a bad move. Having other people control your money when you know what you're doing would be a bad move for me. Because I had a bunch of different companies. I had Visa, MasterCard. I had all those good companies back all the way in. I bought them all in like 2009, 2010, and they went up massively. I'm talking. Here's MasterCard. I'll pull it up just to show you guys my mistakes. So I had them in like in here, $17 to $360. I had Visa. I bought it like in 20, like back down here, about 19 bucks, all the way to $215, $216. It's breaking to the downside though. I would be swapping all these to commodities. I would have swapped them into commodities in here. Here's Google. That looks pretty good too. And I owned it way back here. I mean, it was cheap as heck. Man, I screwed that up. Anyway, but that's, I would have held those in my 401k if I could have done that. I would have known that the real estate market was favorable for stocks at that time, which I didn't know back then, because I pieced this together later on. And I could have done all that stuff differently. Now, what I would be doing is exactly what I'm doing. I would not be trading in and out. I would be buying these companies, holding on to them, the commodity companies in energy and precious metals. I mean, this to me, it looks like one of the best setups, and I'm thankful that I learned all this and gone through it. But guys, the problem I had, I mean, if I just left that stuff in there, or I'd have to quit my job, because what they do is they buy. We got bought out, and they swapped my money into another 401k that didn't have any of those options, so I couldn't buy anything. So I was stuck with like the indexes. And I would have made so much more money just leaving it. I mean, I put a good amount in all those. I mean, I probably had, like I had good amounts, 10 to 20 grand in each of those, like Visa, MasterCard, Google, Chipotle. I mean, I had big stakes in all of them, and they would have, I mean, that'd be multi-millions of dollars in those, because they're all well over 10x, 20x, 30x from some of those time frames, which stinks. But because I got stuck in some of these other ones, and they didn't go up nearly as much, like the S&P 500 and stuff like that. But now the opportunities are much larger, because the valuation gaps in commodities go up faster. And that's why I'm so gung-ho on the commodity sector. They're volatile. They're a lot more volatile, and you just got to hold on for the entire duration. My problem was people use price to validate, and you're not using value. Price, yeah, it's going to move around on you. But if you can hold on and the right conditions come, and the conditions are coming, these things are going to go like rocketing higher. They have already rocketed higher, but that was like off of a super low base. And I think we're just coming to more of a normalcy in a beginning of a commodity bull market. That's the C19 move. Now we've got the big move ahead of us. It's going to be a big old move, and it's going to take some time. And I'm very excited for it. So what I learned from my beginnings: do not trade around. get these companies, hold on to them, ride it through the entire cycle. The cycle's there. The expansionary phase is there. We've gone over all that. The thesis of the channel's in the description link if you guys want to see it. And I could have just, if I had known what I had known now, I could have held all those companies all the way through, knowing that we were in a recovery phase of real estate. That was the last thing that it took me to tie it all together, was real estate. I kept missing that. I was listening to Peter Schiff, I was listening to Mike Maloney, and I was listening to all these other people. They did not have it right. None of those guys had it right. They missed the, they don't know the real estate cycle and what drives what, in my opinion. So that's where I made my adjustments. Now I think it's coming. They're going to be right. This will be $5,000+ gold. It will be, silver is going to take off. All these things are going to take off. So what I would do different is do not trade in and out. Like that's what I had wrong. I would buy these companies, hold on to them, spread out amongst these. I also do a lot more research. I know a lot more technical analysis than I did back then. We have a lot better information. Information flows much more quickly. And I'm sitting in these companies just waiting. I'm not going to screw this up. And because, I mean, if I had held on to those, I mean, I'd probably be retired. I mean, it would have been just ridiculous amounts of money that I would have made. But here, we got that same opportunity coming. And if you're young, well, this is the information you need to know. And you need to hold on. Get your companies. You know what companies I own. I already posted a thing on it, so you know what to do. You know what I'm doing, at least. And you can see how I'm doing. If you guys like this content, give me a thumbs up. Subscribe to the channel if you haven't already. And thank you for listening. This is Finding Value.